On March 9, 2026, the world woke up to a reality it had feared for decades. This tiny stretch of water, only 21 miles wide at its narrowest point, became the center of a global war. Most people don't think about the Strait of Hormuz when they buy a loaf of bread or charge their phone. But as of this week in 2026, that changed. The kill switch of the global economy was flipped. If you want to understand why your gas just jumped 50 cents in a weekend, why the stock market is panicking, and why the entire world is holding its breath, you have to look at this map. To understand the stakes of the 2026 conflict, look at the geography. Here is the Persian Gulf. To its west, you have the world's biggest oil gas stations: Saudi Arabia, Iraq, Kuwait, the UAE, and Qatar. There is only one way out. It's 167 kilometers long. But look at this spot between Larak Island in Iran and the Musandam Peninsula in Oman. It's just 33 kilometers to 21 miles wide. In the shipping world, that is a needle's eye. Because it's so narrow, ships can't just go wherever they want. International law creates 2-mile-wide lanes for ships to enter and exit. By March 2026, those lanes became a ghost town. When Iran and the US entered a direct state of war, this choke point became a no-go zone. Why does this 21-mile gap matter to a farmer in Iowa or a shopkeeper in Mumbai? Because of the sheer volume. Every single day, about 21 million barrels of oil pass through here. That is roughly 20% to 30% of all the oil the entire planet consumes in a day. It's not just oil, though. Think about LNG, liquefied natural gas. Qatar, the world's leading exporter, sends almost every drop of its gas through this hole. China receives 38% of this flow. India imports roughly half of its monthly oil through here. Japan and South Korea, nearly 90% of their crude comes through this 21-mile gap. In March 2026, when the tankers stopped moving, the math changed. Only about 17% to 25% of this oil can be moved via pipelines through Saudi Arabia or the UAE to bypass the strait. The rest? It's trapped. Let's explain how this war thousands of miles away hits your pocket. It's a chain reaction. Step 1. The energy tax. Even if your country produces its own oil, like the US does, oil is a global commodity. When 20% of the supply vanishes, the price of all oil goes up. By March 9, 2026, Brent crude hit $120 a barrel. Step 2. The grocery store. Everything you buy is moved by a truck or a ship. When diesel prices spike, shipping costs spike. Then, the price of your milk and bread spikes. Plus, the Middle East makes the fertilizer used to grow that food. No gas equals no fertilizer equals more expensive food. Step 3. The plastic crisis. Since 37% of global naphtha goes through the strait, factories in China and Europe are currently facing a, quote, plastic crisis, making everything from phone cases to car parts more expensive to build. For anyone running an import-export business, the shipping lanes are the physical arteries of your livelihood. When they close, global freight stops, containers pile up, and your supply chain costs double overnight. Now, let's talk about your money, your stocks, your 401k, your savings. How does a war in a distant sea melt your portfolio? For a common person, it feels like magic, but it's actually a simple fear loop. The profit squeeze. Most companies you invest in, think major tech or local delivery services, rely on fuel. When oil prices hit $120 a barrel, it costs these companies more to move goods. Higher costs mean lower profits. When profits go down, investors sell their shares, and the stock market crashes. Look at the US economy. The Dow Jones fell over 400 points as the reality of the Hormuz blockade set in. US equity markets saw the tech-heavy S&P 500 drop by 2% in just the first week of conflict. The safe haven flight. In March 2026, we saw a massive flight to safety. Investors got scared and pulled money out of risky stocks and moved it into gold and the US dollar. Gold surged to almost $5,400 an ounce. Why? Because a bar of gold doesn't need a shipping lane to keep its value when the world is on fire. The interest rate trap. Central banks, like the RBI in India or the Fed in the US, are in a corner. They want to raise interest rates to stop the inflation caused by high oil prices. But if they raise rates too much, it becomes too expensive for you to buy a house or a car, and the market crashes further. It's a lose-lose situation for your investments. The economic pain isn't distributed equally across the globe. Now, the political players. Market jitters are fueled by the standoff between world leaders. Their faces are blended into the crashing stock graphs, showing how geopolitics directly attacks your savings. India imports 85% of its oil. Half of it comes through this tiny Strait of Hormuz. With the blockade, the rupee hit an all-time low on March 9, 2026. India has about 25 days of reserves. If this lasts longer, the economy faces a stagflation shock. Prices go up while growth completely stops. In Japan and South Korea, they are on a timer. They get nearly 90% of their crude here. They have large reserves, but their entire economies are built on a rapidly ticking clock. In China, 40% of their supply is now cut off. Their factories, the world's warehouse, are seeing their energy and manufacturing costs absolutely skyrocket. In Europe, it's all about the gas. Qatar's LNG ships are physically stuck in the Gulf. Because of this, wholesale electricity bills in Europe have spiked by an incredible 70% this week. US gasoline prices rose 5 to 10 cents daily, hitting over $4 a gallon, eating American purchasing power. Rising energy costs complicate the inflation outlook. January's economic progress is now totally at risk. The Fed is in a corner. Janet Yellen warned that economic growth will suffer as inflation becomes sticky. Markets expect severe rate cuts, even if prices keep rising. This creates total business paralysis. Uncertainty reduces investment. Companies stop hiring entirely and hoard their cash to survive the storm. As we look at the data from March 2026, the terrifying lesson is incredibly clear. Our modern hyper-connected world is actually incredibly fragile. We are all deeply connected by these 21 miles of dark blue water. But beyond the oil price spikes, the stock market crashes, and the massive shipping delays, there is a very real human cost that no financial graph or chart can accurately show. Families are at risk, ordinary lives are being completely disrupted, and the future of global stability is hanging dangerously on the line. It is a fundamental, absolute necessity for our survival and our collective prosperity. Peace isn't just a moral or philosophical choice anymore. We hope for a rapid end to the current conflict. We wish for peace, for open seas, and for a world where we actively build bridges instead of dangerous blockades. No more war. We cannot afford the cost of this kill switch. We choose peace.